Hello and welcome to the Cash Furnace. My name is Eric Downs, and with my co-host Paul Kanzierski, O2 source for daily stock and crypto news. Today is February the 29th, right? I think 26th. Whoo! Oh my gosh, great start. Today's February the 26th, and in today's we are going to discuss bond yields. The saga continues. Where do we go from here? Paul's going to take us into crypto land and tell us how you can get Bitcoin at a. If you like what you hear today on this podcast, please do us three big favors. They're free. Like, comment, and subscribe. Let us know what you think and share this podcast with anyone who you think might benefit from us. Help us make more money for more people.
That's right.
Shall we?
Let's. Another bloody day. Started off okay, right? But then
It wasn't too bad.
Yeah, but then towards the end, it was actually very similar to Thursday, where in the beginning we saw some hype, some stocks go up, and then slowly just trickle down into the shitter yet again.
Well, so I'm gonna maybe I can kick us off with a few things here.
Yeah, go ahead.
So I was actually very pleased with the market's performance today. It's actually exactly what I wanted.
Right.
Let me tell you why.
We're at your 380 level now, right?
That's exactly right.
Yeah.
First of all, number one, that's what I've been really, really waiting for. I've been waiting for an actual touch at 380. And these things, to me, aren't coincidences. I've just seen them happen too many times when major technical levels link up with major psychological levels, right? Mm-hmm. So what I mean by this is that 380 is basically right where our 50-day moving average is extended out to.
Right.
And 380 is, as dumb as this sounds, is a big, nice, even number. And stupid or not, the market loves even numbers. They really do. They call it a psychological level, a psychological support, a psychological resistance. For whatever reason, I think it's just because we're dumb monkey humans.
The biggest being the thousands or the hundreds, right?
Yeah, exactly.
Yeah.
Remember how it was such a big deal when Tesla hit 1,000?
It's so true. It's the same thing with Bitcoin. Yeah. Think about it. When we hit 40,000, we just barely peaked above it, and then last time, because 40K is a big psychological level. Same thing happened when we touched 20K, tanked down to 16.
Yep.
So I bet your 60K is going to be the same thing.
So what's interesting, I think, is that with the exception of Thursday, my prediction for the entire week was right.
I completely agree, man. You nailed it on Sunday.
And I mean, look, I can't do this forever. I can't do this forever. But I don't know. But just watching the damn S&P for so many years, and look, it doesn't mean anything. I can't predict anything. There's such a plethora of factors that go into how the stock market is performing and all the things that affect it. And once you think you have 9 of them nailed down, the 10th one comes out of nowhere, and it's like, someone flew a plane into the World Trade Center. I forgot about that indicator.
Yeah.
But here's the thing. I wish I had a chart up right now with all my lines and my crayon drawing.
No worries, it's a Friday.
But yeah, here's the thing. When the S&P, and actually when a lot of stocks, when they're heading upward, it seems like we're getting a little hot. We'll pull back down, and there's several different retracement levels that are very common for us to hit on. Things like the 10, the 20, and in this case, the 50-day moving average. People see these lines as basically the stock's efforts to maintain a solid mean reverting momentum. Mm-hmm. And if you look back, I mean, if you scroll back for the past year, you can watch that as every time it comes down, it'll pop off of one of these levels, depending on how hard it drops. It might plow through one of them, but it's typically going to stop at one point and find, stabilize and then head up to the next one. And I think my hunch is that that's what we saw today. I think we dropped down, and I mean, Paul, you heard it in the chat. I said right away, I was like, look, we started up, but we plummeted down right away. And I was like, look, 380 is the key level.
Yep.
If we break below 380 hard, we're in big trouble. And I still believe that, because the 380 is like one of our last stops, you know, before, like, I mean, so what happened? Head down to 380, push back up, recover really hard throughout the day. I think, what, 385 maybe or something like that.
Yep.
All the stocks loved it. Ran really hard at the end and then plummeted into the earth. And where did we close the day? 380 and 1 cent.
Yep. So here's what worries me about it, right? Like you said, we ran up really hard and crashed down hard again. There is a lot of volatility right now. And volatility typically shows fear, shows indecision. Not good things for, as we talked about the other night, nice, steady, stable growth, where you can look kind of at the smaller charts and not just the S&P, and make good decisions based off of the TA of the charts, right? Basically, right now, you could make a great technical analysis on a chart and get absolutely fucked because the S&P all of a sudden tanks or jumps. So it's hard as a trader, and sometimes you just gotta, times like these, you gotta just sit back and wait. If you see a really good entry point, sure. A lot of stocks are on sale, are getting these massive flash sales where you could pull, if you time it right, and if you're sitting there watching, you could pull 5-6% as they tank really hard, and you buy near that bottom of that tank, and then they pop up and recover 5-6%, right?
Yeah.
But other than that, other than those very quick ins and outs, generally right now I'm very hands off. And I don't know, I'm sure you could tell I'm not very active in the chat right now. I'm just chilling.
Yep.
I'm just waiting.
Same.
Yeah.
I closed on Thursday. I closed a lot of my most short-term positions. Admittedly, a lot of them at a pretty fair loss. Unfortunately, some were pretty heavy, but I felt that it was more prudent to take the short-term or more speculative bets off the table and just take the loss for the short-term L, lose the battle, but hopefully win the war, because you want that powder on the sidelines for when your strongest plays come back. Because right now, everything, S&P looks like this, and it dipped down right here. This is okay. This is fine. It happens all the time. It's not a big deal.
Right.
And if all goes well, it'll consolidate at the support point. Everyone will relax and chill, and then maybe we have a green Monday, which of course all of this could be boosted by the stimulus package going out. You know, the day that's, I mean, okay. So hold on, let's bring this in as a bit of a slightly more macro view. Like, this pullback really blows. I lost buttloads of money this week.
Yeah.
So much money.
Yeah.
But here's the one saving grace, the silver lining to this, is that this puts stocks on discount. And at that point, you're loading up and you're waiting for the stimulus package to come out. Because if everything was at ripping highs when the stimulus package comes out, it's going to go over. The pot's going to boil over, and you're going to have a mess.
That's exactly right.
That's a problem. I would rather be where we are right now, knocked down, hopefully stabilizing a little bit. Give us some time to load up, and then hit us with that stimulus package. Now, when is that coming? I don't really know. But that would be a perfect play.
And here's a good shoe-in, actually. So one of the reasons why we saw this dip, and we talked about this yesterday, is because of the 10-year bond yield, right?
Right.
Because that price, as we talked pre-show, that price is going up because no one's buying them. No one is buying these treasury yields at all.
And it's important for them to be bought because it's the lifeblood the funding of our government.
These bonds fund banks, and banks fund the government, right? But here's the very important thing about the stimulus. Who has been by far and large the biggest buyer of these bonds, the Fed, right? So as soon as the Fed comes out and says, okay, we're going to print another trillion and we're going to buy purely bonds with it, all of a sudden that yield goes back down. Everybody wants back into the stock market.
Right.
And then you go up.
Right.
As a trader, I want to make this point really clear. You should never be at a point, unless you're retiring and living off of your investments, there should never be a point where you don't like when the stock market goes down.
Yeah.
Let me say that again. There should never be a point where you don't like the stock market going down.
Right. Yep.
And that is because you should have powder on the side waiting for deals. This is a sale, guys. This isn't the end of the world. This is the time where you get your best moves. That stock that you've wanted to buy in that's just been astronomically going up and all of a sudden has tanked 25% for this past week total. That's a sale, man. You got a quarter off what you were thinking about buying into anyway.
Just imagine it was your favorite pair of jeans at H&M, man. When do you buy? When do you buy? When they put up the sign that says 25%?
That's exactly right.
Yep. Buy two pairs.
And the only reason why you would be upset about this would be because you're over leveraged in this market right now. Means you didn't have any cash on the side, you're fully in, or you took too many risks. And this is part of the market psychology. So if you're in this camp where this week has been the end of the world and you're not actually happy about snapping up some good deals, you know now. Next time we rise up, start pulling some of that cash. Start selling some of it.
Yeah.
Make that powder pile nice and big. 20%. If you feel like we're running really hot, 25, 30% cash. Because as we always say, these markets are cyclical. And when we go up and we overboil, right? And then we shoot down like this, that's your time to use that powder. Use that cash you have sitting on your side to your benefit and make some great money out of it.
It's and you know what, man? It's hard to do that. At least for me. I consider myself
absolutely. It's hard for anyone to do that.
You know, and I am, to be honest, I got wrecked this week because I didn't follow that very well.
Right.
Because I saw too many opportunities and my eyes got spinning dollar signs in them, and I bought too many positions. And not only was it too much to manage at one time, but when everything crashed, I had too many things open. I had too much cash, or sorry, too much of my capital exposed. And I felt it, man. And it's funny because, you know, if I think back 5 years ago or whatever, when I started investing, I would have never thought about this.
Right.
This wasn't a thought ever. And now that I am where I am, if I could tell people, you know, a new investor, like, dude, when the market goes up, you're going to be feeling fucking euphoric, and you're not going to want to take your profits, and you're not going to want to convert to cash, because why would you? Because it's FOMO.
Right.
You have to do it. You absolutely have to do it. It's an absolute must. So I don't know.
No, I think I've learned this the hard way, simply because of the massive volatility of the crypto market, right?
Yep.
I got wrecked. I got my account canceled so many goddamn times when I first started trading that eventually I was like, shit, I gotta learn my lesson here. And I think it shows in the even in the group chat. Like, I know we got a lot of young guns in there. We're all making great money. This year has been insane, right?
Yep.
And everybody's pulling these crazy fucking risky calls, and a lot of times winning. And I'm always preaching. I'm like, guys, you know, if you're nervous about this, because a lot of the guys will be like, I feel like this is running too hot. I'm like, absolutely. Pull some cash out. Put 20% to the side. And then at least when it tanks, you're not sitting there thinking, oh my God, my whole account is ruined. How deep is this going to go? How red is this going to get? You're like, nah, look at all the opportunities that were just presented to me.
That's right.
It's the way you got to do it. No matter your account size, you could have $1,000. Stick 200 in the side in cash. Make sure that's cash.
That's right. And don't go below it.
Yep.
So, look, that being said, I just brought up the 10-year treasury yield index,
Mm-hmm.
and today was a red day.
Yep.
It's down almost 4%, the treasury yield. Now sorry, and just to be clear, the treasury yield was like at somewhere around 1.5%. That doesn't
Right.
mean it's negative now. It's down 4% of its value. So, it's still very low, but
But
on
high
this
in
run,
comparison.
it's high
Yes.
short term. Yes.
Yes.
So I'm hoping that this might be a turning point for us.
Okay.
I'm being cautiously optimistic.
All right. I like
So
optimism.
I'm ready to put both feet back in the pool.
So I feel like this whole theme of finding deals and everything is actually a good shoe in into the crypto market right now,
I
right?
agree.
Which is actually the stock market. It's not crypto. So I know Eric gave you a little teaser that you could currently buy Bitcoin at a discount, but that's not technically true. What you can do is you could buy Grayscale's Bitcoin Trust, which is GBTC, which is currently trading at a 4% discount. Now, we've talked in the past about the premium that people are buying when it comes to Grayscale's Bitcoin Trust, right? Meaning that, say, Bitcoin was at $10,000, you were paying somewhere in between 18 and 34% higher for the equivalent of one Bitcoin trust than you were for a Bitcoin. Does that make sense? Okay.
Absolutely.
So right now, that price is actually 4% below the actual price of Bitcoin. So if you see in the future Bitcoin going up, now is a fantastic time to buy actually into Grayscale's Bitcoin Trust. Because when it goes back up and that premium rides again, right? Say it goes up to 30% premium yet again. What you can now do is sell that Bitcoin Trust for that 30% premium, 30% above Bitcoin, and you now have 34% higher amount of cash that you could buy real Bitcoin with, which is great. That's fucking great. You
Agreed.
just got 1.34 more Bitcoin than you would have if you just bought the regular crypto, which is weird. I've never advised somebody to not buy Bitcoin, not buy the real asset that you could pull and put in cold storage, right? But this is a great opportunity, man. Great opportunity. And if we continue to go down and this discount continues from a lot of people are speculating it's now from market competition because Canada just opened their own Bitcoin ETF and also just the pure fear coming out of it because a lot of the people that buy the ETF aren't really knowledgeable about crypto in general. Hence why they would buy something where they can't put it in cold storage where it's not their coins.
Mm.
But yeah, it's a great time. I forgot where I was going with that, but
I think
great time to
no,
buy.
it's a fantastic opportunity. I think you put together a very solid point here. I
Yeah.
mean, listen, if our listeners and our viewers are smart, which they are, you
They
know,
are.
so some
The
sharp.
thousands of them out there.
They're all sharp. They're all geniuses. They're gonna listen to you. They're gonna listen to you. I think it's a smart play, Paulie. I think you make a great point, but I'm not remotely surprised. That's the only kind of point you typically make.
I appreciate the confidence on that one. Other than that, I really don't have much to say about the Bitcoin or crypto market in general, other than the fact that it's holding pretty strong compared to the dips we've seen. So we've seen some really hard dips when it comes to stocks, and just this year, the whole idea behind Bitcoin, right, is it's not supposed to be correlated with stocks. It's supposed to be when you have fear in the market, when you become uncertain about the US dollar, it's supposed to go up because it's supposed to be this unstoppable value, based. It's kind of like, it's why people call gold, why people go to gold when the stock market goes down. But like in March, what we saw was stock market tank, and also the entire crypto market tank as well. So there's a slight divergence right now where the stocks fell pretty hard and crypto didn't fall that hard. It fell, don't
I
get me
noticed.
wrong,
I
but
noticed.
not nearly as hard as the rest of the stocks in the stock market. So it's
Yeah.
kind of a promising uh, little peek into what potentially could be the future here.
I noticed that as well. I didn't say anything because I
Yeah.
didn't know what to make of it. I didn't know, is this a big deal or not, but I was really pleased to see that. Because I suppose what was really heartening about seeing that was that it wasn't just, how do I say, like it was it's like investors weren't lumping Bitcoin in the same asset class that they'd be willing to fear sell. Do you know what I
Right.
mean?
Yep.
I think that's really what stood out to me. I was like, wow. Like normally when fear selling happens, the most speculative and the most high growth assets take the first and the biggest haircut.
Right.
And Bitcoin is one of those assets right now.
Right.
We strongly believe in it, but it is high growth. It's insane growth, and it is still highly speculative.
Right.
Let's
But
be
the
honest.
whole the whole reason why it was created was to be a store of value, right?
Yeah, and
And
it looked
maybe we're finally seeing that play out. I don't know.
that's that's the point that I was trying to get across. Is
Yeah.
that is that when people aren't willing to sell the fear sell an asset, it's like that's what people used to do with gold. They'd be like, I want gold when I'm scared, you
Right.
know.
Right.
And now it's like, hey, here's Bitcoin. The market's dropping, and Bitcoin is dropping, like you said, dropping, but not nearly as much.
And
Pretty interesting.
if you noticed, in comparison, the rest of the crypto market dropped a lot harder than Bitcoin.
Oh,
Ethereum went from 1900 to 14 at one point, right?
holy! I actually
Yeah,
didn't notice that.
that is a big drop.
That
But
is a huge drop.
Bitcoin had like a 4% drop from
Yeah, that's
where
nothing.
it's at. That's right. In
But again,
comparison,
but that relationship is one I'm used to, right? Because that's one we see in the stock market all the
right.
time.
It's
The
absolutely
little
right.
guys get knocked harder than the big guys because everyone believes that the little guys can't stand up to the pressure. Whereas now Bitcoin is seen as this behemoth that now has all this firm, institutional constitution. That's a little verbose of me to say, but
Sounded good though.
see it people see it as more reliable, reputable investment as an asset class. And I think, Paulie, I think that has everything to do with everything we've been talking about a month, is that all of the big guys getting in the pool and saying, hey, get on, come on in, and the water's fine, you know?
Yep. Yep.
So
I would
love it,
agree.
dude. I love it.
Actually, to that point, um, what else has been very stable during these S&P drops? Facebook. It's been
It has. I've
it's
noticed
been
that.
doing very well. It does
Yeah.
not. It does not want to go below 260.
No. You know who called that? We
Uh,
did.
yeah.
The cash furnace. Yeah, we
No,
said that
we said it
exactly.
was a good deal at 264. It's still a good deal now,
Because
and the people that are invested in it see the future for
yeah,
this. It is not speculative. It hasn't been getting these crazy gains, so there aren't like ridiculous amounts of YOLO money in there, right? It's just people that know the fundamentals of the business and expect this to go nowhere but up in the future.
yep,
So,
that's exactly right. So
another good place.
love it, dude. The cash furnace on fire, literally.
We're doing okay.
We're doing okay. All right. Well, with
So,
that,
yeah, if you
please
like what you
take us
saw
home.
today, you know what to do. Like, comment, maybe subscribe, hit that notification bell, send this to somebody who would benefit from the knowledge we're trying to drop on you every single day. Uh, we take Saturdays off, so we'll see you on Sunday for the good old Sunday drive. where we talk some BS in our longer format. And until then, Cash Furnace out.